I see you there watching me on YouTube. I love you. I wore this shirt just for you today.
I love you.
I really, I love you. You know, I yub you watching. And I see all the patrons on there. I see new people from all over the world. I just had to ask Paul, where the hell is Tel Aviv? Paul, you know, I was a geography bee champion in 5th grade, so I really know my geography all over the world, but I forgot where Tel Aviv was. We welcome you guys in from all over the world. We thank you for your support. All the fondling of the thumbs up, the subscribers, which are absurd, you beautiful patrons, which I see the new ones joining. Paul, we have an announcement about Patreon for the next couple of days, so if you're interested in our Patreon page, we'll get to that. We want to cover a myriad of, is myriad a word? I don't even know what I'm saying. We want to cover a myriad of topics today. We're taking your requests. As always, we're taking a $10 donation through the YouTube Super Chat. If you want a specific company or stock you want to analyze.
Or question. If you have a specific question you want asked, we will give it to the Super Chat people first, $10. What is your charity of choice this week, Seth?
So the charity was my choice this week. We've done some great ones in the past. And the charity is Akron Children's Museum. Paul, you got the website there, don't you? This is akronkids.org. This is a charity in Akron, Ohio. They promote STEM, scientific learning and exploration. My kids love it. It's founded by some friend of ours. And they've really grown this, Paul, from a branch out of, I think we should do this, to something phenomenal where they get many, many visitors per year. And so all your $10 donations there, we just got one in. All of your donations will go to that charity this week. And we're super appreciative of you guys. We have a couple companies on our list today to go over. Paul, talk about... Paul, we got some heat this past weekend with our Kathy Woods and ARK investment video, and I wanted you to have your stance and double down on what you think your... Go, Paul.
For everyone who thought I was very mean to Kathy Wood, suck it.
Oh, Paul, how dare you?
I don't care. Listen, I like being the villain, but I want to be a compassionate villain. And the reason being is, you know, I believe that I created this term called financial manslaughter. I think a lot of people out there are not purposely trying to hurt you financially, but when you listen to them, they're going to make lots of money. You're going to follow them. You're going to end up holding the bag and losing a lot of money. This is what happens all the time. Wall Street does fine. Main Street does not. And I'm not a big fan of class warfare or anything like that. I'm just sitting there saying there's a lot of misleading and there's a lot of misleading people out there. I'm sure Cathie Wood believes what she believes, because if she didn't, that would make her a sociopath. But I do believe she believes what she believes, but it's completely misguided and contradictory, and it's going to end up being bad. I have no problem calling that out. Do I do it more aggressively than I should? I'm sorry. I probably do. I also want to be funny. I like being funny, but I'm also aggressive because I do believe in calling people out. I feel like it's my responsibility as somebody who thinks and understands to relay my point out there. And when I hear her say things that just make no sense, I have to call it out. I like being funny. I'm sorry if it hurts your feelings. If it hurts your feelings, then I will give you a trophy. You're probably the kind of person who also believes in giving every kid a trophy just because they participated, which I don't believe in at all. So there's more to come. We have a big one coming out tonight at 7 o'clock.
Yes,
it's a really big one, 30 minutes long.
So tonight, if you are, let me think, Tim, I have to be careful with this. If you were at all turned off by the way Paul approaches potentially criticizing someone in this world for misleading potential investors, tonight at 7, if you're in love with this, you'll be licking your chops because we finally react to our dear friend, who's not a friend at all, Stock Mo. I show Paul and our trader Mo a video from Stock Mo, and Paul, you had some choice words for his tactics about his fundamental approach to investing.
He's a moron.
And we have it all on tape. We're going to release it tonight. If you are faint of heart and you're upset by the last one, get your popcorn because this one was, it's going to be incredible. It's coming out at 7 p.m. this evening. I see tons of donations coming in for the kids.
Are you writing these all down? Oh, that's very nice of Tim, just for the kids.
Yep.
Very nice of you, Tim.
Yep. And Garoy from UK said, no CCIV tattooed chef, Coinbase, Neo, or Checkpoint in this show. Thank you for the donation. Yes. Look at
I agree with them. Like, we're not going to do those now.
And Jonathan, I got you here with Jonathan, my magic buddy here. He's Jonathan Montgomery wants to look at another company. I got you all, I'm marking you all down here. So Paul, that's coming out this evening. Paul, make an announcement about joining the Patreon. If they want to join Patreon over the next couple days, please.
So guys, we get a lot of questions about this. If you join the Patreon now to the end of the month, Patreon's going to sign you up, charge you again at the beginning of the month. For all those who already signed up, you got such a good deal that I'm sorry. But for going forward, for the next 3 or 4 days to the end of the month, if you sign up, when you get charged again, email help@everythingmoney.com and we'll refund you your first charge. I apologize for this. Is not our policy. This is Patreon's policy. It's very frustrating. One of the things we're going to do in the future is we're going to change the billing from Patreon to our own website if you choose to go there. That way it makes it easier and it makes you get charged on the anniversary, blah, 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 blah. So I apologize for this, but it's Patreon. It's not us. And it's just overwhelming. And for those of you who already got charged ahead of time, you got such a good deal on it. Please swallow it. If you're really upset about it, email us and I'll probably still give in because I'm, whatever. But hopefully you see all the value you're getting on it. The software is great. Was it Jonathan Montgomery who wrote, Paul, I love your retirement software, even though it told me I need to save $10,000 more per year. Something like that. It's like, oh, no, sorry. Yeah, it was Jonathan Montgomery.
Jonathan, I'm sure he'll get there, though. I mean, later in the year, he'll be saving a bunch. So later down life. Okay, so Tim, thanks for the donation. I got Muhammad. I see they're asking for Nintendo. Guys, I already have 5 stocks, so it's hard to say chill out on the donations, but it will take us some time to get through these. And so, Paul, maybe we should get after what we do well, which is a fundamental analysis of companies. So while you're here, guys, we would love and appreciate an early tickle that thumbs up, fondle that thumbs up in Paul's belly.
And for those of you who've been using the software and reporting bugs, phenomenal job. The great news is we're getting about 15 bugs reported a day. 2/3 of them are the same bugs over and over. And they're usually having to do with the price being wrong. So we're very happy that the number of bugs of actual issues is decreasing over time. Our developers are doing a great job. The focus for this month will be purely development of the bugs, making sure the site is getting better and better. And then from there, we're going to work on the app and bring in more stocks, et cetera. So the whole point is, guys, we have 3 developers full time. We plan on going down to 2. But the whole point is we're growing so much that we're going to make the software better and better and better every month. You're crazy to not sign up at $22 a month right now. Absolutely crazy. What's our first stock, Sethi?
All right, we're going to get after it. Neil's saying, shuffle up and deal, boys. I love that saying. Here we go. The first stock we're going to get after, which was off the request line for a donation, is BlackRock Investment Management Company. The ticker symbol, Quinn, is BLK. BLK for BlackRock. It's an American multinational investment management out of New York. They've been around since 1988. Paul, is this a REIT or no? It's BlackRock is the world's largest asset manager with $8.5 trillion in assets. Paul, that's just a little more than what you have in assets.
Correct.
$8.5 trillion. Let's get after. Are you on the Everything Money site or?
I'm going to the Everything Money site.
Hopefully.
What are you laughing about?
I was like, what if you can't sign in on the show?
I actually don't think it's letting me right now.
That'd be helpful. You want to go to buy charts then real quick?
What the?
Careful now. Careful with that.
Tim, do you know why we can't get stocks?
Meanwhile, while Paul is fidgeting around, we're going to get to BlackRock, and I see you all in there. We appreciate it. Paul, you want to get on?
I'm going to go on
White charts. Here we go. Let's head over to White charts. Again, this is BlackRock Investment Management Company. Sorry for the delay. We love you. Ticker symbol is BLK. What do you got, Paul?
All right, guys. We have a market cap of $125 billion. So this is a big company. 125. PE ratio, first X, about 24. X right there. But a very healthy profit margin of 27.26. By the way, after thorough discussion in my head, I will be keeping the PE ratio.
Oh, Paul.
I will not be keeping the profit margin, though.
Dun, dun, dun.
So I will be replacing profit margin with return on invested capital at some point here in the future. But PE ratio will stay because I like the idea of looking at PE versus cash flow to determine why there's differences there. Okay, so we have one check, and we have a nice little dividend here of 2.2%. Okay, so on $125 billion, that's roughly what is that? $3 billion high side on dividends. We want to make sure the free cash flow supports that $3 billion dividend. Okay.
I'm writing all this down. So how was their profit margin again, Paul? Was it over
29?
10?
It was like some billion percent. It was really high.
Okay, let's go to revenue growth. Revenue growth over the past 5 years is pillar number 3.
Okay, revenue growth, guys. We have 12.26 to 16.2. Check mark there.
Check, please.
Okay. Profit growth. I'm assuming it's doing well.
Yes, 3.17 to 4.9. Check mark there.
Great. Okay, how about shares outstanding? Folks, we just did another video. We're doing some what we're calling evergreen videos we hope will sit around for a while. And if someone out there finds it, we just did a video on shares outstanding, why it's so important. Paul, it really opened up my eyes to shares and how companies can, obviously decrease their share, increase their share, buy back shares, and how important it is. So pillar number 5 is shares outstanding. We want this number going down, Paul.
And we're not flipping to the Everything Money website. We went from 163 million shares to 152. So they're doing a good job of buying back shares. So guys, they pay $3 billion in dividends, and they're buying back shares. You need free cash flow to do those things unless you want to take on debt. So it'll be very important that we understand their free cash flow. Extremely important.
Pillar number 6 is current assets over current liabilities, Paul. I love this list. I love my 8 pillars, and so do our patrons and viewers. Let's get after pillar number 6, baby.
$10 billion in current assets, $988 million in current liabilities. So they have plenty of cash on hand to pay off their liabilities.
How about total assets? Can they pay everything off? You love
No,
this.
they cannot.
Okay.
I would have told you that.
Let's still check. Sorry about that.
Okay.
Pillar number 7 is free cash flow. How are they going to pay that $3 billion dividend, that 2.5% dividend? Can they pay it, Paul?
All right, guys. Free cash flow is cash from operations less your capital expenditures. They use this to make acquisitions, buy back shares, pay dividends, pay down debt, etc. Free cash flow, 2.15 to 3.55. So it's a check mark, but boy, guys, that's a tough one.
What's wrong? Tell me.
Well, they pay $3 billion. What's 2.2% of 125 billion? It's like 2.8 or something like that. I don't know what it is.
Times 0.025.
No, 0.022.
Oh, sorry about that. 125 times
0.022
is 2.7.
So 2.75 billion.
Did you say that off the top of your head? 2.7.
I said 2. Whatever it is.
Good Lord,
guys, their 5-year average is 3. Boy, they eat up a lot of their free cash flow with dividend payments. That's unless there's a reason for that. I don't know if they're required to do that for whatever reason. Are they considered? I don't know. But the whole point is they pay a lot of their free cash flow out as dividends. A lot. That is something to keep in mind. I don't know. I want to do more due diligence on the company, understand the company. And by the way, guys, understanding a company does not mean reading the news about the company. That is not understanding the company. Tim has said that before. He's right. He sees other YouTube channels and they believe, oh, I did my due diligence. I Googled. Now, Googling about the company is important to understand what they're doing, allegations against them, good things, bad things. But understanding a company is going through and understanding more details about the financials. Not just, oh, well, their CEO took a dump today and it was mild in texture, and so therefore the company is a buy. That is not doing research on the company, okay?
I would say we got.
What is mild in texture? That just
we got tore up on our Oxygen video. Literally, people are calling us stooges because we don't see the pipeline and a lot of ifs and when they get this, if this happens and when that happens, you guys better watch out. And I said, it's crazy. They don't.
All right.
You're looking at right now.
I mean, no, I'm not just looking at right now.
Right. There is an aspect of growth.
No, there's a lot of aspect of growth. The point is with Oxygen, though, their pipeline wasn't insanely awesome. It was, if every single thing they're working on isn't crazy awesome, they're going to do fine. When was the last time that happened in this world? Where every single thing they did was crazy awesome fine. Doesn't happen.
Let's go back to BlackRock. This is BLK. Paul, we have $3 billion in free cash flow per year as the average. Now we move to pillar number 8. Is what is our multiple to find a desired market cap? Paul, you know the pillars, so damn it.
The average is $3 billion in free cash flow. If you multiply it by 20, that's 60.
Yo, boy.
$1 billion. They're currently at 125, so it needs to fall in half essentially. Guys, free cash flow is free cash flow. I don't know what to say. I mean, look at the last 10 years. 2 billion, 2 billion, 3.5, 3 billion, 2.8, 2.2, 3.8, 2.9, 2.6, 3.55. It's very consistent. So unless there's some major growth potential here that I don't see, this is a very, very, very expensive company. Very expensive.
The current stock price is $816. On March 20th, that day of all days where the stock market went so low, it was at $354, Paul. And prior to that, it hadn't got higher than $565. So it was trending around $400, that half price you're talking about.
Yeah,
it's just skyrocketed recently. So
I don't know what to say besides, guys, I think this is an expensive company. I think there's going to be other opportunities out there. BlackRock is a very, very large money management company. And just remember, when the stock falls and people start pulling money out of the markets and start pulling money out of investments, this is going to get hurt even more, is my guess.
So when this is seen later, they're saying, you idiot, you didn't do due diligence on this company and you're wrong. This is parabolic rise. What would you say to that, Paul? You don't need to look. This is your first screener, right?
Yeah, I just look at it and saying, guys, it's already expensive. The free cash flow doesn't tell me the story where I get excited. I mean, in 10 years, the free cash flow is up 50% over 10 years, right? I look at that saying, it's over 50% of that, but the average over the last 5 years is 50% over its first year. I don't know what to say. I remember looking at T. Rowe Price last year. I haven't looked at it recently. That seemed to be a better money manager. CBRE I liked more, things like that, like asset managers. I don't know. I don't think BlackRock is the one to go with.
Can you pull up the 8 pillars on this, Paul? Because I would say is like, it's funny is of a company that you're kind of down on. Look at all those checks with the 8 pillars.
But guess what? The most important ones on value are X's, right? So that's something to think about. This happens very commonly. Google, Microsoft, Apple. It's all this one. At the end of the day, these matter a lot. That's it.
That is our take on BlackRock, the investment management company. It's an avoid at the moment, but at the right price, Paul is liking it. Okay, shall we keep going, Paul?
Correct.
The next company, we thank you all. Make sure you guys are tickling thumbs up. This is interesting. The next company is Algonquin Power and Utilities. Paul, it's a utility company.
Ugh.
Tell us your thought. The ticker symbol is AQN, and of course, Paul, Algonquin.
Which is
Milwaukee.
Milwaukee is Algonquin for the good land.
Which many of you might have known, and that might not even be true, but we're saying it.
It's from Wayne's World.
I know, Paul. That's why I brought it. Algonquin. I love it. Algonquin Power and Utilities is a Canadian renewable energy and regulated utilities conglomerate.
Energy.
And not going to work here. Actively invest in hydroelectric, wind, and solar. Awesome. It was founded in 1988. It has 3,400 employees. And this was a request from ZXR Skills.
Thanks for the donation.
Thanks for the donation. Go ahead.
Market cap about $10 billion.
Okay,
PE of 12.3, check mark, and a profit margin of 47%, check mark. Now, I will keep in mind, guys, utilities, I tend to exclude utility companies out of my analysis because I believe they're analyzed a little bit differently, but we'll still go through this because I think the numbers are very good from that standpoint.
Pillar number 3 is revenue growth over the past 5 years for Algonquin.
Revenue growth in the last 5 years. You ready, kids? 794 to 1.6.
Wow.
Check mark there. Yeah. Profit growth over the last 5 years. 98 to 782. Holy cow.
Holy moly. Wow, yeah, we're doing
but I will say, the 782 right here, there was a $625 million other income one-line item, one-time profit. So it's not really apples to apples here. It should be more like 150 million. just same as last year, it should be about 150 million. So taking that out, it should be 150. It's still a check mark, but it's a little misleading on the PE here. Keep that in mind, kids. A little misleading on the PE.
4 straight checks, though, Paul. I'm liking this. Pillar number 5 is shares outstanding.
274 to 597. Over doubled their shares outstanding. So, guys, let's do a quick recap of what I think so far.
Oh, boy.
The shares outstanding have over doubled, which means if you owned a share 5 years ago, you now get half of the access to the profit and revenue that you got before because they diluted you. It's not a stock split. It is purely a share, them issuing more shares. Second thing, their profit is extremely misleading. 783 million looks awesome until you realize there's a one-time other income of $625 million. Last year, they made 530 with a one-time gain of 387. Both of these taken out would have given you about $150 million in profit. So that PE is based on 782. Taking that out, that makes the PE what? 60? Right? Because 10 billion divided by 150 is about 66 or whatever. The number's around 60. This is what we teach when we're talking about do more due diligence. The average investor goes, oh, it's a 12 PE. This is awesome. I'm going to buy this. And then you realize this one-time gain. Go find out what this one-time gain is. If you look at past years, guys, $23 million loss, $7 million loss, $2 million gain, $9 million gain, loss, $4 million gain, blah, 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 blah. Then all of a sudden, $386 million gain, $625 million gain. Huge jumps. You have to take those out. You have to do research on what they are and then take them out. This is what I love seeing in financials because nobody in this world does this. So couple that with doubling the number of shares outstanding. I'm pretty much already I'm out, but like let's go further.
The Kevin O'Leary, you're out. Paul, someone's saying, Peter is saying, Paul, you fail to realize the market is forward looking. Your stock price is going to be highly correlated to future growth. Good current cash flow with no future prospects is bad.
That is incorrect. My views are always forward looking. My thought is though that most people only look, people are willing to pay for anything that's growth, any value, as opposed to, if you look at our stock analyzer tool on my Excel sheet, it factors in growth in the future. But I'm not going to sit there and say any price is okay as long as you're growing. That's what the market does when they pay those sky-high prices. This company right here, where's the growth going to come? Could it double? They're selling for 60 times earnings when you take out their other income. Okay, so I look at that going, value investing is all about growth too. That's what people always forget. The difference is we aren't willing to pay anything for growth, whatever number exists. We sit there and say, okay, $1 today is worth $1 today. $10 tomorrow is worth almost $10. It's still 10 times growth, but if you pay $20 for next year's 10, you're overpaying. That's it.
Yeah, Peter's backing up and saying he uses 20x. We use 20x. If the prospectus of the next 5 years of the company is poo, you can cut that 20x by half, which we do.
Yeah, we do.
Yeah. But we certainly don't want to pay that 30x multiple or 40, or in case of Tesla, what is it, 1400x?
Yeah,
multiple?
something like that.
Okay, let's keep going. We're still on Algonquin. Algonquin. We're at free cash flow, Paul?
Nope. Balance sheet. Total current assets, $760 million. Current liabilities, $635 million. So they have a check mark there.
Yep. So that's pillar number 6 is a check mark for assets over liabilities. Go ahead, Paul.
Now for the wonderful cash flow.
You love this. It brings a twinkle to your eye, Paul.
They lost $87 million in cash flow 5 years ago. They lost $280 last year. X.
Oh, boy.
Their average in the last 5 years was losing $102 million. X and X for price to free cash flow because there is no free cash flow. It's negative.
Yikes.
Yeah, I'm out. They don't even make cash flow. Look at the last 10 years. Loss, 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 gain, loss, loss, gain, gain, loss. So profit, profit, profit. 7 of the last 1, 2, 3, 4, 5, 6, 7, 8. 7 of the last 10 years, they had a cash flow loss.
So let us be clear. If you're watching this later, we've never heard of this company. This was requested. I got you, Paul. We've never requested, but the point is that people ask us for our initial opinion. We certainly don't have time to look at 10,000 stocks, but when someone requests one, we can look at this. And Paul, your personal opinion is right now, you don't need to know much more about Algonquin, do you?
I mean, unless there's something I don't know, like, hey, they all of a sudden are releasing something next year that's going to make their profit go up 10 times that they've already invested in, the money's already gone. I don't get it. I mean, there's negative cash flow. The only reason they were 12 PE is because of what's it called? A big one-time gain on something. They probably sold something and made some money. I just don't get it. If somebody in the chat can look up what their big gain was last year.
Well, it's a great question. Someone said they had major acquisitions in 2018.
That doesn't matter.
19 and 20, Sean's saying.
But that doesn't matter.
Okay.
The acquisition is not part of the free cash flow. Free cash flow is below acquisition. For the cash flow, the acquisition is after free cash flow. Because remember, you take your free cash flow to make acquisitions, to buy back shares, to pay dividends, etc.
Okay, so no reason to look at, well, actually, pillar number 8 is an X, and there is no desired market cap in your mind. There certainly might be one, but with a market cap of $9.6 billion, you'd like to see a lot more coming out of Algonquin.
I'd like to see cash flow coming out of them.
Surprise! Okay. We appreciate you guys. Make sure you fondle that thumbs up like we're fondling Paul's belly belt. Paul, you are looking good in that shirt. I mean, I think you're looking very sexy today. The
funny thing is, my weight's up a lot in the last year and a half.
You look phenomenal.
But it's all from...
Look at that. Look at that. Look at that.
Can I do it?
The Stuart Smalley dance. Is that what it is? Sorry, guys. There's little inside jokes. Okay. We appreciate the donations, guys, that have come in. We have 5 companies already in line. If you'd like to see a company, we're asking for a $10 donation in the YouTube Super Chat, which is going to Akron Children's Museum
this week. What's the next one?
The next one is Neil. Oh, dear Neil. One of our dear patrons is asking for Ingles Supermarket. IMKTA. IMKTA. Ingles.
We might owe him money back. Oh, maybe not. We actually have the money. We actually have the numbers.
Okay. Ingles Markets is an American supermarket based in North Carolina. As of 2020, it operates 197 supermarkets in southeastern U.S. And
this is exactly why I want to stop looking at profit margin. Profit margin in supermarkets is very, very low.
Yes,
I'm actually surprised how high this one is. And you're going to laugh when I show you this.
This is Ingles. Go ahead, Paul.
$1.3 billion market cap. PE of 5.9, check mark. Look at this profit margin, 4.55. That is one of the highest profit margins I've seen in supermarkets.
Yeah.
Kroger is like 2%. You know what I mean? So this is pretty solid.
So industry given, is this a check for supermarkets, or do we have to get to 10%?
It's an X still, but that's why I'm getting rid of profit margin, because I don't believe it's very indicative of what we want to see.
Okay, let's keep going with Ingles Supermarket. Pillar number 3 is revenue growth over the past 5 years.
3.83 to 4.72. Whenever you have retail locations, I want you to go in there and do the research. How much of this growth, it's a check mark, but how much of this growth is same-store sales versus new locations? Because they're based in North Carolina, they're in a growing market, they're probably expanding in growing markets. So when you open locations, revenue can get driven, even though your existing locations have a loss in revenue. So you always want to look at that, guys. But so far, it's a check because we don't discriminate against that.
We have a couple of viewers saying this is, Paul, this will tickle you. It's a Michael Burry stock, which, we love.
Oh, wow. Is it really?
Mm-hmm.
Oh. So, remember, guys, don't just invest because Michael Burry invests, okay? You have to do your own research. I know that sounds weird, but that's true.
Profit growth is pillar number 4.
55 million to 215 million. Oh, wow. That's a big jump.
Yep.
That's a big jump. That's excellent. That's a big jump.
Pillar number 5 is shares outstanding. We want this number of shares going down. I bet it might be, Paul, for this.
It is exactly the same.
Oh, well, that's okay, right?
Exactly. It's a check mark for me. It actually might not even show that. It might actually show as an X, but we'll see.
Okay. Pillar number 6 is current assets over current liabilities for Ingles Supermarket. This is interesting.
These tend to be negative. 498. Oh, to 318. That's a check mark. Good for them. Supermarkets tend to be in the negative on that stuff. By the way, look at our broken software too. I found a bug.
What's happening with shares?
Yeah, you know why?
Tell me.
Because they were equal. It never happens when they're equal. So it's just like,
It was twitching.
So that is a check mark there, by the way, folks. We'll put that in later. But the cash flow right here. Ready, guys?
Number 7 is free cash flow growth. Paul, what can we do with free cash flow?
We can buy dividends. We can pay dividends. We can buy back shares. We can buy acquisitions. We can make acquisitions, pay down debt, etc. This is the lifeblood of the company. Look at this growth, Seth. 43 million to 265 million. Now, here's the issue.
For a supermarket?
Yes. Now, here's the issue. I understand why this is a Michael Burry stock.
Go on. I love when you do this. Just this is frothing at the mouth.
The average is 67.5 million over the last 5 years, but last year was a huge. Guys, we need to understand why it was such a huge year. Oh, the shutdown.
Dun dun dun.
So the question is, the shutdown probably hit supermarkets where a lot of people being eating at home, no restaurants, etc. So maybe the 67 million is probably reasonable. I don't know. So 67 million times 20.
Good Lord.
Is $1.34 billion.
Yeah, it's 1.3 is the actual market cap of the company. 1.3
yeah, so
billion.
it's a check mark. Barely, but it's a check mark. So guys, one thing I want you guys to understand on any supermarket is they're going to take a step back from last year's numbers, because last year was an insane year. The question is, are people going to be more inclined for a long period of time to use things and pay and go to supermarkets, et cetera? That's what you need to ask yourself. At the historical average over the previous 5 years, it's a very expensive stock from a free cash flow perspective. But you got to figure that out. I don't know. See, it's funny. I don't necessarily agree with Michael Burry. He probably has good reasons to believe it, but I look at it saying it's barely selling for 20 times free cash flow the last 5 years, unless you think the sustainable level is above 67. If you think they're going to hit a new plateau above $67.5 million in free cash flow, then I think this is a pretty good idea to look into this.
Captain Karkar saying, are all supermarkets experiencing this surge? This seems
yes,
a little...
we did Kroger, and Kroger was big too.
Interesting. Final take on Ingles supermarket, Paul. This is interesting.
If you think that they're going to be sustainable over that, yeah, they're not going to get to last year's numbers again. But the last year number was 250 million versus 45 million. If you think they can stay north of 67 or 68 million and grow free cash flow over the next 5-10 years, I think this could be a company that works for buying it at this price.
I saw that free cash at 250 something, but with an average of only 67, I mean, you're almost just discounting it a bit. I mean, right?
I'm discounting it a lot, actually.
Yeah. So
because you have to remember, last year was an aberration. Just like that's like valuing Carnival Cruise Line and Southwest based on last year's numbers. Oh, you can't do that.
People are saying I'm sorry, Paul. Burry bought it in the fourth quarter of 2020. So maybe look at that. So
look at that.
That's why he bought it. Right? Look at that. Would you look at that?
And at that point, guys, it was selling for less than 10 times free cash flow over the previous 5 years.
Yeah, look at that. Okay.
Right? So that's why it's doubled in price.
Wow.
Almost.
What an incredible buy he had back there.
Yeah. Who paid $50?
Someone.
Sherwin-Williams. Great question.
Incredible. Yeah. And Bosserman asked a $50 donation. That's going to Akron Children's Museum in Akron,
That's
Ohio.
Incredible.
Thank you so much for that. We appreciate it.
That's very generous of you.
Yeah. We have a couple more stocks in front of Sherwin-Williams. We'll get to it for sure. Yeah, he did get a cheap one. An incredible buy for Burry. Yeah, Paul, boy. I mean, how do we – the question might be how does he do what he does? I guess it was that easy. But how did he – I mean,
guys, Michael Burry is an amazing, amazing investor. This guy in that movie is true. He literally looked at the credit scores of every individual within mortgage-backed securities. Like literally, what are the mortgages in here? And the guy said, nobody does that. He does that. He's the one that found GameStop. He found GameStop at $3 or $4, was buying it. He sold probably at $30, $40, $50. But he is an absolute genius. I mean, the guy's incredible. He just pores over financial documents over and by the way, a doctor, physician.
We'd love to get him on the show, huh?
Oh, God.
One day.
The guy's worth hundreds of millions of dollars. He would never come on the show.
Maybe.
If we had 1 million subscribers, something like that.
I'm into heavy metal big time, bro.
Oh, yeah, he does like his heavy metal.
We could talk about it for days.
You guys can drum together?
Okay, guys. That is our take on Ingles Supermarket. Incredible company. And looks like we're a little late to the game, but maybe who knows. Paul, we will get to Sherwin-Williams. We have a couple in front of Sherwin-Williams if you'd like to get back to our 8 pillars.
Oh, yeah, let's do the ones above Sherwin-Williams.
But we will certainly get to Sherwin-Williams. We appreciate it. Again, if you're looking to join the Patreon, this is the end of the month. I do see some people maybe not pulling the trigger because of the old Patreon double payment. We will so here's how it goes. If you want to join Patreon over the next couple days, you can join in that tier, and it will rebill you on the 1st of the month, May 1st. And if you email us at paul@everythingmoney or help@everythingmoney.com, we will get you refunded for that stupid double payment that Patreon does. And in the future, we'll probably be working off of Patreon, getting toward our own site. But that's how it's going to be. So don't. We'd hate for you to lose your spot on a tier if you're a little hesitant. We'll certainly work with you on that one. Paul, the next company that Jonathan asked for is KNX. The ticker symbol is KNX. This is Knight Swift Company. Knight Swift Transportation Holdings is a publicly traded truckload motor shipping carrier based out of Arizona. It's the 5th largest trucking company in the U.S. I've never heard of it. The revenue is $2.5 billion a year, and it was founded in 2017. So relatively new company, Paul. I
see their revenue at $4.7 billion.
This is just a general Google, so your numbers are probably correct. But this is Knight Swift.
Market cap, let's call it $8 billion to round up a little bit. PE of 19, so it's a check. Profit margin of 8.77, that's an X. Okay, so do they have any dividend? They have a small dividend of $55 million a year.
Adorable.
LOL.
Pillar number 3 is revenue growth for Knight Swift. Oh boy.
1.12 to 4.7, check mark. But here's the deal, guys. I guarantee there were acquisitions along the way, because look at this. They go in from 1.12, over doubled, then over doubled again. So there are probably some acquisitions here. So even though it's a check mark, we got to look at the acquisitions to make sure.
Okay, so we're up check mark on revenue. How about profit growth over the past 5 years?
94 million to 410 million. Again, a check mark, but big jumps here, definitely acquisitions.
Wow, okay, you're certain of that. Of course.
I mean, it has to be. It has to be.
See, Paul, as a normal person, I just look at these numbers and already get confused, but you just look at it and you're like, bam, you know.
Well, I just look at business. How would I grow? How would a big trucking company nationally quadruple their revenue, quadruple their profit in 1 year? A huge one.
I'm sorry, I totally lost track of my train of thought. Go ahead, Paul. I'm sorry.
We have a company here. All of our companies combined do about 20 million in revenue here at Crossroads. The only company that's going to quadruple in revenue is probably this one, Everything Money. The rest of them, I mean, they're still small companies relatively. For us to grow, oh yeah, Dynasty Owner would be huge. Dynasty Owner is going to go way higher than that.
Jerome just brought up a great super chat donation. He put in $15. He said, no stock request, but this is a challenge for us to match the donations from super chats for live streams to bolster the charity donation ball. That's an interesting concept.
I will match them.
Just like that, Paul says he will.
I will personally match them. I won't do it from Everything Money.
Thank you, Paul. That means it doesn't come out of my paycheck. I love you. But it's going to my...
It never comes out of your paycheck anyhow.
I know. I'm just saying that. I'm trying to be funny. So
I pay you on revenue, not profit.
Jerome, thanks for the idea, and that's a great one. We should have thought of it ourselves. You know, I learned.
By the way, I've repeated that to Seth probably 20 times. He probably really does believe it comes out of his pocket.
It's just nice of you. I mean, it's nice. Okay, Knight Swift. We have.
Can I get to this?
I'd love to.
All right, thank you. Another example: 80 million shares to 168.
Oh my God!
Now look at this. Their shares went from 80.6 to 178. In that 1 year, I said the revenue skyrocketed. They made an acquisition somewhere, guys. Since then, they've been buying back shares, though. But they definitely issued shares to make this acquisition.
Oh, yeah. They're saying they have a huge merger in 2017. Knight Swift acquires a majority stake in software company Elios.
Wow.
Yeah. Okay. We'll get to it. Yes. And folks, I forgot to say, I would be remiss to say that Trader Mo is not here today. He is not joining us. It's a little lonelier in the studio, Paul. Go back to our old roots. Just me, you, and Tim sitting in here. Obviously, Quinn's working the boards, but just the three of us here. Tim, going back to the old days of us just talking to ourselves in a room. But Mo will be back tomorrow. He put all of the Bidnass Nation on hold just so he could go golfing. I'm kidding. Actually, he was making trades. And if you're in that Bidnass, that middle Patreon tier, I guess you guys made a superior trade this week that was incredible. So
2% in 90 minutes they made.
Incredible. So Mo will be back with his live stream every day at 9 a.m. talking about news, notes, and stock analysis. Tomorrow morning at 9 a.m. See him there. Let's keep going, Paul.
923 million in current assets. 840 million in current liabilities. Check mark there.
Check mark.
Free cash flow, kids.
Pillar number 7, free cash flow.
OMG.
Tell me.
60 to 309. Yeah. This average is wrong.
Tay.
Has to be wrong.
Tay butt wheat. What is it?
Saying the average is 28.9. Tim, Seth, can you do me a favor?
Oh boy.
So 60, 128, 97, 125. Yeah, this is wrong. Why is the free cash flow adding up wrong here?
Give me the numbers again.
60, 68, minus 31, plus 25, plus 309.
309, that's enormous. Divided by 5 is 86, Paul.
Yeah, 86. Tim, can you report this bug, please? Thank you. 86 million. What was the market cap of the company?
8 billion.
Yeah, so it's almost 100 times free cash flow. X. It is a check mark on free cash flow growth, but it's an X on the multiple.
This is Knight Swift. You're not in love with it.
No. Well, the acquisition. Let's see where the acquisition is.
So Jonathan's saying on free cash flow, note that the Knight Q1 2021 earnings said they had 750 mil in free cash flow for the trailing 12 months.
What? How?
Yeah, what? Jonathan, let us know, baby.
How? I mean, that's a big game changer, guys.
Yeah, which is a price to free cash flow of 10, Paul. Of course it is. 750 mil in free cash flow for the last year. Your thoughts? You're stumped by this.
I mean, I haven't looked at that. I haven't seen that. But if that's the case, that changes the story. The question is that free cash flow sustainable?
Sustainable, yes.
Guys, whenever just like my relationship analogy, if Tiger Woods was married to Elin and he didn't cheat on her for 1 week, would you sit there and say, oh, Tiger's no longer a cheater? No, that's just a one time he didn't cheat on her for a week. Doesn't mean it's going to happen forever. Correct?
Mm-hmm.
Great analogy.
Yes, it was beautiful.
So same thing here. Just because they made a lot of money in 1 quarter or 1 year, the question is it sustainable? Because if you're going to find a future value for it forever based on 1 year's aberration, you can't do that. You got to sit there. Every investment is the present value of all future cash flows. That's it. That's it. To make sure that's correct.
Someone said, Paul, just to go back, this is a noob question, but so are acquisitions good or bad? They can be both, of course.
Oh, no, acquisitions can be good and bad. I will say this. Most large company acquisitions are done for ego purposes and for a CEO to show that they're being active. They're usually not great for CEOs to do. They're usually not great for investors to have acquisitions. But that doesn't mean they're all bad. If you find a CEO that's really considering revenue and profit, doesn't care about share price and wants to drive revenue and profit, which will then drive share price, and a person who thinks like an investor, that's a big goal there. Don't just go invest in a company where the CEO is trying to make himself look like he's accomplishing a lot. That's it. So acquisitions can be great for a company. There's a lot of quote unquote synergies, which I hate that term, but synergies, it can work very well.
And Jonathan's also saying that Knight-Swift probably got more of a free cash flow bump from e-commerce in 2020.
What were they doing e-commerce wise? Is that the software thing? Oh, that could be the software then.
Mm-hmm. Interesting.
All right, what's our next company?
So final take on Knight-Swift, Paul.
I'm going to be...
the stock price is 46 last
Listen,
year.
my thing is, even with the first quarter, I mean, do your due diligence in the first quarter. Why is such big free cash flow? You have to understand that. Because if it's software related, then figure out if that's going to happen for the long time.
The next stock we're going to do after you, pretty pleased with sugar on top, fondle that thumbs up like you're fondling Paul's little belly and his abs there. He's working so hard on his abs. You don't do sit-ups, do you, Paul?
I do ab crunches.
Of course you do. This one is Nintendo, Paul. You know what Nintendo is. You and I, 1989, playing Super Mario Brothers.
I have to go here. I have to do this one for Nintendo.
Nintendo. The ticker symbol is NTD. Oh, maybe I got the wrong one, Paul.
NTDOF?
I have DOY. Am I on the wrong one?
No.
NTDOY. Is this it?
I mean, that's one. Yeah. Let's just look at that one.
NTDOY is Nintendo.
Now, we don't have foreign companies, so I have to go to Y charts for this one.
Okay.
Market cap, $67 billion. PE, 16.2. Check mark there. Profit margin, over the last year, about 25%. Check mark there.
Kind of low for software, wouldn't you think?
Yeah. It's still healthy. 2.65% dividend. What's 2.65? What's 67 times 0.0265?
1.77.
Okay, so 1.77 billion. Let's call it 1.8 billion every year they pay out in dividends. So remember, guys, free cash flow needs to be well north of this for me to feel comfortable with that dividend. Okay? So, income.
Pillar number 3 on, revenue growth over the past 5 years. Pillar number 3, baby, for Nintendo.
4.2 billion to 12 billion.
Jeez.
Check mark there. Well, remember they had what's it called? Pokemon Go happen. And they had a couple of Nintendo Switch came out and all these things.
I remember
really
that
did a great
summer.
job.
I remember that summer when you were walking around the parks here in Cleveland with your head down on your phone, getting
Did your kids get into Pokemon Go?
Those Charizards.
I never did it.
I saw you. There's video evidence of you walking around by yourself. By yourself.
Please find it.
Walking off cliffs.
Please find it.
Chasing down Charlemagne.
Remember Damon used to do it? One of our great leasing guy, he used to do it all the time. He may be watching.
Oh, so some people are saying Nintendo had, and now the show's completely off the rails, Paul, because they had nothing to do with the Pokemon. Someone else is saying, so maybe I'm wrong.
All right, profit 137 million to 2.3 billion. Check mark there.
Nice profit. Okay.
Nice profit. Shares outstanding.
This is 4 straight checks, Paul. I hate to get you all fired up. Profit. This is a shares
961 down to 953. Check mark there. Sorry for interrupting you, but you take 18 minutes to say, Paul, what about the shares outstanding?
Well, I'm really just trying to slow you down.
That's very
Pillar
true.
number 6 is current assets over current liabilities.
18.6 billion versus, oh my God.
Talk to me.
Guys, 18.6 billion in cash. Total liabilities, 5.7. Of total liabilities, not even current. So you have to deduct, they have $67 billion market cap. You need to deduct 13 billion. So essentially, this is like buying a company for $54 billion. Remember, guys, their total liabilities is $5.7 billion. $5.7 billion. Their total cash is 18.6. This is phenomenal, guys. So you're really only paying, it makes the PE go down and the price of free cash flow go down.
You love this.
I love it.
The mother of all check. I do like when you write that. Or chickadee check. People love both sayings, Paul. That is, how about, so is that's current asset. Free cash flow is pillar number 7. Somebody's got to host the show. I'm struggling. Go ahead, Paul. Free cash
flow. You ready?
Go ahead.
Go ahead. Call it 420.
Okay.
To 3.1 billion. That's a check mark.
Jeez Louise. Okay.
All right. Then 80. Then 1.3 billion.
Oh my gosh.
And then 1.45 billion.
Okay. And 3.1. Good Lord. Okay. The average free cash flow over the past 5 years is 1270, Paul.
That doesn't make any sense. Oh, 1.27?
Yeah, 1.27.
Okay, gotcha.
Ta-da.
I was like, 1270, what are you talking about? Okay, so the company, oh man, this is poop.
Come on. Talk to me.
Well, here's the deal. I'm gonna eliminate the first 5 years there. Okay, so let's go take an average here. What is it, about $2 billion? So the company is 54 billion divided by 2 equals 27 price of free cash flow. That's an X. So it's very expensive. Even on last year's free cash flow, it's still very high. It's still about 18. It's including paying down, having the cash be a net against the market cap. So, oh boy.
So the stock price is $70 today. It got as high as
and another
80.
thing is, what was our number of what was our dividend?
1.8 billion was the dividend.
Okay, they pay they get $3 billion in free cash flow, so it's there. This isn't a screaming deal. But if you're a believer of Nintendo going forward and they're going to keep increasing their revenue as more gaming and things like that, then it probably could work out. But this is not a screaming deal.
We're talking about a company that reached a stock price of $75 in 2008, Paul, then all the way down to $16, even lower, $13 in 2014, 2015. That's an amazing fall. $70 down to $13.
Yeah, that's incredible.
It can happen. Final take on Nintendo.
I'm not jumping at the chance, but I would keep an eye on it because I like their financial statements a lot. And if they can pull back to last year's levels, I think you might have a good, decent buy there.
Nintendo.
Nintendo.
Okay, that's our take. Love it. Paul, you want to take a deep breath? What are you thinking? That was
Let's
5
do it.
straight
Let me
companies.
take some water and some drink.
We are going to get to Sherwin-Williams next. Paul, you love Sherwin-Williams. You paint your house about every 3 months, inside and out, and so you love buying all that.
Can you put me on mute?
Paint. Yeah, go ahead. And meanwhile, make sure if you're joining, make sure you fondle that thumbs up. As always, if you're in the Patreon, you know we love you. Mo is coming back tomorrow, and we'll have our live streams going in the morning. Tonight, if you're late joining, tonight is Paul's reaction to stock Mo. It is fiery. It is filled with some unpleasantries, and you better be ready for it at 7 p.m. tonight. Probably one of our most anticipated videos in terms of what our patrons have been asking for a long time. We finally react to Stock Mo and all of his BS.
If you'd like to support me and defend me in the comments,
we'll need you.
Do.
We will need you. If you love us and love our channel, we will need you because the haters will start coming, which is fine. I just we can't stand it much longer watching all this malarkey. So here we go. Ivan, thanks for the wonderful donation. Shall we get to Sherwin-Williams, which are big supporters of the Cavs? My wife is watching. I forgot. They're like one of the main supporters of our dear Cleveland Cavaliers. We love you. And Sherwin-Williams, Paul.
Sherwin-Williams. I'm going to go to Y charts again here because we're still pulling some data on data feed for Sherwin. Trying to update the split they just did.
If you've never heard of it, Sherwin-Williams is a Cleveland-based company. They make paint and coating.
If you've never heard of them, then you've never been.
Well, who knows? They could have talked to somebody in Latvia, Paul. We're huge in Latvia.
I'm sure.
You know that, Paul.
I'm sure Sherwin-Williams has stores in Latvia.
I'm going to apologize to our Latvian fans.
We have them in Mexico.
Our Tel Aviv fans. You may have never heard this, and if you haven't, you're in luck. It was founded in 1866, Paul, in Cleveland. I didn't actually realize this was such a Cleveland base for so long. I should support.
Do you know the CEO before this one was a Walsh grad?
I'll be darned. Well,
he was the longest tenured Fortune 500 CEO, I think, from 1999 until last year or 2 years ago.
I got to buy all my paint here. Now the price has never been higher, Paul. It's $268 is the stock price, and just a couple years ago was $125. So it's been skyrocketing here. And let's get after Sherwin-Williams. What is the market cap for this?
You want to look at this? In 2000, the stock price was $6.
Ticker symbol is SHW. SHW. What'd you say? 2000. Wow.
2000, the stock price was $6. That's when 1999 was when the guy took over.
Incredible.
All right, guys, $72 billion market cap. PE, very expensive, 37. Profit margin, pretty low, 9%. So we have two X's to start.
Yeah-oh.
Dividend yield of 0.9%. So what is that, $630 million dividends? $630 million in dividends. Okay.
Ivan gave us $20 to not say going to the moon, space apes, or diamond hands. We don't say that all too often. We'll stop the moon malarkey. I hear you. Thank you, guys.
We never said to the moon.
Well, we do it in sort of like a joking manner.
I think he's saying, thank you for doing that.
Thank
you for not doing that.
Yeah, that's great. Ivan, I love you. My middle name, Ivan. Go ahead, Paul.
Is it?
It's Seth Ivan. You know that.
No, it's not. Say swear.
My middle name is Ivan.
Say swear.
Why would I joke about that?
Say swear.
I swear on my mother's grave. Ivan, Seth, Ivan, Kurchin. Das ist meine Name. That's my name, baby.
That means sick. Your initials say
Ivan the Terrible. I'm bringing the hammer.
All right. $11.9 billion in revenue versus 18.36. Check mark there. Big jump from 16 to 17 and 17 to 18.
Check mark. And just like that, Maxim is in Latvia. I told you our Latvian people love us, Paul. Pillar number 4 is profit growth over the past 5 years.
1.13 to 2.03. I'm surprised it's not a bigger jump, but that's okay.
A little jump. That's okay. Here we go. Shares outstanding. This company cannot be selling off more shares, Paul. I'd be shocked.
They're buying shares. 275 million down to 271. Not by much, but they're doing. But 10 years ago, they had 310 million shares.
Good boys.
Sick.
Okay. Pillar number 6 is current assets over current liabilities for Sherwin-Williams, the paint company out of Cleveland.
4.6 billion versus 4.6. It's literally, it's an X. Barely an X. By $3 million, it's an X.
So they're a little underwater.
Slightly.
Pillar number 7 is free cash flow growth for Sherwin-Williams. Pick it up now, Paul.
You ready?
Yeah.
Are you ready?
I'm not ready. I just said yeah, but I'm
1.07 to 3.1. Check mark. Then 1.66, 1.7, and 2.
The average free cash flow over the past 5 years is $1.9 billion. $1.9 billion.
Let's call it $2 billion.
Okay.
72
billion is the market cap.
divided by 2, 36 times 5-year free cash flow. That's an X.
A little high, huh?
Guys, love this company. I'm not just saying it because I'm a Cleveland guy. I love this company. They dominate the paint market. Talk about PPG is another big paint company.
Yep.
What was that? And Benjamin Moore, but Sherwin they are the paint company. I just think if you buy this at a reasonable price, you're going to do well with it.
What price is that, Paul? I mean, the current price is half.
Yeah.
Oh, Paul.
Listen, I'm just telling you, it's half. Tell me all you want that you sit there and say, Paul, and it's not going to drop in half. Okay, you guys never experienced a bear market then if you don't think good companies will drop in half. It's still 36 times profit, and the growth isn't there. It's a $19 billion company. It's not going to grow 20% a year. It's just not.
You said all that so fast. I'm trying to process each sentence you say.
It's just not going to happen, guys. I love it, but
Obini's asking for puts on this company.
Oh yeah, let's look at puts. They're going to be terrible, but I'll show you the puts.
So Paul's going to pull up options, which I am new to and going to be learning this year, along with a lot of the folks in our Patreon. But of course, these options are covered calls and puts. And Paul's going to. We have tons of videos and live streams for our patrons about options tradings, covered calls, selling puts. So if it's a little confusing, just stay tuned and we can get you on this while Paul logs in here to looking at the put options for Sherwin-Williams. What do you think, Paul?
Sherwin-Williams.
Yep, here we go. Meanwhile, make sure you guys fondle that thumbs up. Of course, we always love you. Paul, you have any options? You said options are sort of tough nowadays, right? There's not a lot of great...
Yeah, because everybody thinks that the catastrophe won't happen, so they're like, we're going to pay you crap.
Okay, talk about what this graph is behind you and what's going on with this thing.
So, guys, remember, a put is where if you're selling a put, you're giving somebody the right to put shares into your hands at a certain price in the future. So, for example, Sherwin-Williams at $270. If I think it's worth $135, maybe I'll sell somebody an option a year from now. I go to January 21, 2022, 270 days from now, and I scroll to 135. Let's go to 133.33, which is a weird price. Why is it there like that? Somebody might be willing to pay me $1?
You're sad about this? $1 per share?
For waiting 270 days on a $135 strike price. That means you're making about 1% a year. It's garbage. It's garbage. I'd wait for, the great thing about puts is if you get a lot of volatility, it can increase the price of the put, so it's more likely that it hits. So for a company like Sherwin, wait for a pullback, even a 20% pullback, which is very common, because look at this chart. This chart is very parabolic. This chart in the last year, let's look at the last year. Oh, maybe not parabolic, but look at over here. Just a year ago, it was at $150 a share. I mean, it's gone up almost double in the last year, guys. I mean, that's a big rise. It doesn't take long. I mean, look at this. It was at 215, 220 just a month or two ago. So I look at this going, wait for that pullback. Volatility increases. The put prices will increase. You might be able to sell some shares at lower prices.
People are saying that the exploding housing market, a lot of people were buying and selling, repainting their houses.
Yeah, probably.
Yeah, and new builds, of course, with that lumber going crazy. It looks like the stock price is following suit. So.
Yeah, probably. Remember things, guys. In 06 and 07, when markets crashed for real estate, right before then it was looking great, wasn't it?
I don't recall. I'm not as smart as you.
Well, it's not about being smart or not. It's just think about every bubble. It's all great until it's not great anymore. It doesn't end because the last bit of good news comes out and nobody cares anymore or there's nobody else to buy. It'll happen. You'll be able to buy Sherwin-Williams at a better price in the future. Trust me, a better value in the future. It might not be half, but if their fundamentals get that much better in the next 5 years and the stock goes down to 200, that'll be a good time to buy.
Yeah, they're saying folks all over Canada are saying folks in Canada are saying there's Sherwin-Williams all over the place. Yeah, that's crazy. This is good to hear.
By the way, somebody said big inflation coming. If you think for 1 second big inflation isn't here right now, you're missing it. Just do me a favor. Go out there and try to hire a contractor. Go try to buy a house. Go to try to hire employees. You got to pay through the nose. That's inflation. That's inflation right then and there, guys. Tim is giving me the thumbs up because that's exactly what happens. Inflation's already here, guys. When I have to pay more money to get somebody to, when I have to pay 30% more money to get somebody to do the exact same job versus a year and a half ago, that's inflation. Income is basically inflation. You know what I mean? If you want to look at what real inflation is, it's what income growth is, right? Because at the end of the day, you're using your income to buy stuff. I mean, literally, the cost to remodel things is incredibly high. I mean, it's a crazy world out there. We have inflation already, and it's going to keep picking up, I think, because they're printing money and giving it to people. That's just, what do you expect to happen? They're going to buy more stuff. When they buy more stuff, it increases demand. When you increase demand, you have to pay more for labor. When you increase labor, your cost of goods goes higher. When your cost of goods goes higher, then the prices go higher, and it's a vicious cycle. And guess what? It makes sense. The last 20 years, we have very tame inflation. These things revert back to the norm. We're going to have big inflation. And what happens when there's big inflation?
Well, that's what people are asking, actually. So Sean's saying, you know, as maybe a new investor like myself, is what do we do about it? You know, so inflation's here. We get it. What do we do? How do we prepare? What are your thoughts on that? But what can normal people like myself with a little savings and a job?
Well, for one thing, real estate's a hedge on inflation because when income prices go up, like if you own a house, and I say real estate, you don't have to own a rental. You just own your own house. If all of a sudden the cost to build that house doubles, that same house, if your house costs $200,000, brand new today, if a year from now it costs double the amount of money, do you think your house is worth $200,000 anymore? No, of course not. Because somebody's going to say, well, I could build for $400,000 or I could buy my neighbor for $350. Which would they rather do? They'd rather buy the neighbor for $350. Get a little bit of a discount for buying an older house. Fine. Buy good, solid companies that have great cash flow. Those guys will be the ones that are able to reinvest and make up for the changes with healthy margins, et cetera. That's the best thing you do. Because remember, guys, when there's a lot of inflation, what happens? How does the Fed fight inflation? Can somebody please answer that question? How does the Fed fight inflation versus inflation? What do? Seth, do you know what they do?
I'm not very good at this. We've done videos and...
If prices are going like crazy, what do you think?
Oh, raise interest rates?
Thank you.
To slow everything down?
Increase interest rates. And this is why I don't believe in stock values, because currently stock values are based on very low interest rates. If we get a lot of inflation, there's only one thing you can do well, not the only thing, increase interest rates. And when you increase interest rates, the cost to borrow goes up, the margin accounts go up, everything goes up, and what happens to growth? It slows. So when everybody's paying all this money for growth, and all of a sudden inflation hits, you have to raise interest rates, what happens to growth? It becomes more expensive to grow. So what are you going to do? Growth slows, profit slows, Revenue slows, even goes down. All of a sudden, you paid a huge number for a company or a piece of real estate, and all of a sudden, you can't justify it anymore.
This is downside risk.
This is downside risk. Inflation is a real risk, guys, we're going to have. And if you think inflation is just going to go away, it doesn't just go away. Look at Volcker in the early 80s. He was hated for picking interest rates to 18, 19, 20%. They had such high inflation, they had to fight it that way. And isn't it ironic that August of 82 was the absolute bottom of the secular bear market? And since then, interest rates have gone down and stocks have only gone up. I made the argument the other day, this might be a 40-year secular bull market that we've been in. When I thought it was ended in 2000. I might be wrong. It might have been just a continuation on. So inflation is going to be fought with increased interest rates, and increased interest rates drags down asset prices.
What about the printing of money? I guess they're talking about another stimulus.
That's what you're doing. When you're printing money, you're putting money into people's hands. What do they do with that money? They spend it.
Yeah.
What do they buy?
Magic cards.
They buy stuff.
Mm-hmm.
If you buy a lot of stuff and you need to increase production, and there's raw goods, raw materials of that production is now scarcer, what do you have to pay for the raw materials? You have to pay more money.
Yeah.
When the price goes up for the raw materials, what happens to the price of the product?
Slow down. When the price increases, of course.
Okay. Then what happens? Then you got to pay more labor, and then it's all trickle effect to all prices going higher and inflation. That's what inflation is, guys.
Mm-hmm.
It's all this domino effect along the way. And then at the end of the day, the Fed's going to be left with a question: how do we fight this inflation? How do we fight? Because that's one of the goals of the Fed. It's supposed to be full employment and inflation. And they fight it using interest rates.
It's funny, Ayrton from Peru, haven't seen you in a while, Lervia. Printing money is like increasing shares, Paul. Is that a great analogy?
That is actually a really good analogy. Because all you're doing is making money more easily available, and therefore you're splitting up the world's value into more and more dollars, so devalues the dollars, devalues the shares. Now, I'm not saying it's a bad thing. Nothing in and of itself is good or bad. The question is, how does it lead to the future? Well, how does it affect the future? And when we've all been so used to the last 20, 30 years, 40 years of decreasing interest rates, listen, I just bought a new house. I was fortunate enough to pay cash to start, but refinance it. I'm going to get 3% mortgage on this huge house. I mean, really? 3%? It's crazy.
Kurt is asking, and I love this last name, Paul. It's Schwakelstuka. I love you, Kurt. You know I love you. Is inflation different in other countries, for example, emerging markets, Paul?
I don't know what that means, what that does, but what do you mean by inflation's inflation, whether it's here or there or anywhere. It's still inflation. Less stable economies tend to have much bigger fluctuations of inflation. Look at Venezuela, look at Iraq after the war, look at Germany after the war, look at Japan. All these things, they had major inflation because the government would try to print money to get people, spend, et cetera. So I don't know if I really understand the question to really answer it properly.
Well, maybe, again, inflation, I get the concept, but the repercussions are still kind of foggy to me. Like someone says, what does Paul think is going to happen with inflation?
I think it's going up. Where's it going to? I have no idea. Mm-hmm. But I think inflation's coming, but I thought that 10, 12 years ago too.
Will inflation cause a crash in the stock market? These are pretty simplistic questions.
It might be the reason why people blame this going to crash, but we don't know exactly what's going to cause a crash. Just like when I was preaching overvaluation years ago, it took COVID to cause the crash. It's the room filled with gasoline, as John Hussman says, and there's a fire in the corner. We don't know which spark will cause the explosion, but there will be an explosion. We just don't know which one it'll be.
When will we start talking more about one of your loves, which is real estate? I know people are asking us so much about this style of investing, but
well, I get a lot of questions on Patreon. Paul, do I get real estate analyzer? Absolutely, and we'll do more. Just like guys, on Thursday we're recording a video with one of the good friends of the show, Hesh Sagafi. We're talking about mindset. One of the things we talk about here behind closed doors is how do we incorporate mindset into this channel? Because a lot of life and success is about mindset. So there's a lot of growth left in this channel. It's not just stock. It's going to be real estate, mindset, investing in general, whatever asset you're investing in. It's not just about picking one specific asset. It's about looking at all of them and having the right mindset to go forward with them.
Yeah, you sort of wanted to pick 3 pillars of our slogan for the show or our MO, and you did pick mindset. That's one of the things I've had to learn for a long time from you is just the mindset of being disciplined and not following all these trends, the hype stocks, the hype cryptos, just being
Seth, let me ask you a question. When we were in high school, we went to a very good high school, right?
Yeah.
Very smart kids in our high school. Were you the smartest kid in our class?
No, I think
by grades, in terms of grades.
I think I graduated like 27th.
Oh, that's higher than me. That's better than me.
Oh.
Yeah.
Maybe I'm wrong. Maybe it's 43, Paul. Does that sound familiar?
What was your GPA?
I might have slacked off senior year.
Doesn't matter. The whole point is we had a lot of smart kids in our class. We all did very well, went to great colleges, et cetera, right?
Yeah.
But the mindset is what changes everything. If you look at the people who are most successful now, I guarantee it's the people who have the better mindset of everything, right? That's what's going to lead to the most success.
Yeah.
Your mindset has changed a lot in the last 3 or 4 years.
Well, I'm in a very unique position in that I thought my mindset was set, and then I met you and it's completely shifted my whole life.
And I don't know my mindset. That's why I constantly read. I don't know what the right mind. I mean, there's always shifted. Like my mindset always changes based on things I read and go, oh, this makes sense. This makes sense. I mean, we have Tim in the office and Tim's very big on mind. Tim's life changed 10, 15 years ago because he started watching a lady named Danny Johnson, right? And Tim always talks about it. He apologizes for it. I'm like, no. He got a lot out of life by going to Danny Johnson events. He went from a guy with debt to now, he told me yesterday how much is in a personal account. I was like, damn, Tim, you rich. What was that? Complete opposite way. Tim's gone from debt to complete cash liquidity, and it's awesome. Mindset is everything, because if you don't have the right mindset, I don't care how smart you are. I don't care how talented you are. If you can't do a process and you don't have the right mindset, it's absolutely wasted. 1,000,000% wasted.
Yeah, someone said, Paul, we both love this book, Atomic Habits. Teaching Wealth said, isn't that a great book for mindset? I'd love to get that guy on the show one day. Hopefully we get famous enough to get that guy on the show. Yeah. Okay, guys.
I will answer that question. Hey, be honest. What did you think of me in high school, Seth? Do you remember me from high school?
I do remember you.
Just be honest.
Well, you had your little clique of like little friends.
Nerds.
Yeah, and I could see you guys are kind of laughing and having a good time.
Oh, did you?
Yeah. And so like
Did we ever talk in high school? I don't remember us ever having a conversation in high school.
I don't think so. I mean,
not one time. And by the way, we didn't go to a big high school. We had 199 kids in our graduating class.
I knew of you. I mean, of course.
What was that?
I knew of you.
Of course. We had classes together.
Maybe, so one of my dear friends in the world has punched you in the face.
Yeah, but not in high school. It was in 7th grade. So the only time I've ever been punched in the face was that he was the best man at Seth's wedding, punched me in the face on the bus in 7th grade, and I got in trouble because I was mocking him.
He was a fighter. I mean, he was an angry little Cuban. He was an angry little dude. Yeah, he was an angry little dude. I mean, like, if you crossed him, he's nice and calm. If you crossed him, he'd get you.
Literally, it was just me sitting there, and I went like, and clock. I was like, oh. So, no, I got in trouble.
So yeah,
I was instigating.
He's a dermatologist now in California and having a beautiful life, of course. So, but
so
anyway.
We didn't know each other, and I just thought Seth was just a jock, and that was it. I was just like, oh, this guy thinks he's really cool.
I really, unlike some folks in high school, I really treated my time there very importantly, Paul.
Oh, you did?
I mean, it was I knew my parents couldn't necessarily afford it. None of my friends from where I came, I drove 27 miles to high school. I mean, it was a big thing for us.
Yeah, you were on my bus. That's the other thing. We were on the same bus together and we didn't even know each other.
And so I wanted to dress really well. I always wore like...
You wanted to dress really well?
I overdressed a lot.
You wore that chain wallet.
No, that was when I went to No Doubt concerts in the summer, Paul. But at
school... No, you saw me at school.
No, I have multiple pictures of me. Full tie, full everything. I overdressed. I really wanted to show up for that. And I had a great time in high school. But okay, listen, Paul, I love you. We can't talk about high school BS.
I like talking about high school. I think it's a great question because we didn't know each other at all. I mean, we literally, guys, we went to a small high school. There was only one person in all of high school. The fact that I even know this, I didn't have a class with in all 4 years. Only one person. Seth and I probably had, because we were both smart, so we had a lot of the same classes together.
Yeah.
So we had a lot of classes together, but we were never friends. We never talked to each other. I remember just thinking, there's Seth, he's cool. Guys, when I say when you see this version of me that calls people out, that was not me in high school. Me in high school was like, hi,
everybody, I play baseball.
Yeah, please don't announce my chest win on the overhead. Please don't announce my chest. I didn't play baseball, by the way, but
yeah,
I was
that's
like
right.
so
You
deathly
said
afraid.
this.
I know.
You would be embarrassed because over the announcement on the mornings, they'd say Paul Gabriel won a chess
and
tournament.
They would turn around and clap for me like, nice job, Paul. Meanwhile, I know they're making fun of me going, you loser. And now I'm going to buy all their houses and piss on the ashes.
Paul, how dare you? Okay, that's a great way to end that rant. ZXR Skills, again, is throwing the cheddar around. He wants another company, Paul, another donation to Akron Children's Museum. The company is TD. It's a boring bank stock, as he calls.
Toronto Dominion Bank. Well, I think we have to give him a refund here.
Go on.
Remember, we don't do banks. And I should have probably said that ahead of time.
Well,
let's ask him for another stock. Because remember, I don't do banks, energy, commodity, things like that, because the way you look at a bank is a totally different perspective than the way you look at a company that sells. Cash flow is not, as my good friend Gary Mashuris said at youtube.com/Gary Mashuris, he always says, Paul, I don't even think the CFOs of banks understand their free cash flow. So I don't do banks. I have a book upstairs that literally is worse than watching paint dry that you just bought from Sherwin-Williams. Look how you put
nice
that all
plug,
together.
Yeah.
It is awful. And I need somebody to just like teach me, and it's just terrible.
So folks, today we looked at BLK, BlackRock Investment Management Group. We looked at Algonquin AQN. We looked at IMKTA, which I forgot what company that was. We looked at KNX. We looked at Nintendo, and Sherwin-Williams are all the companies we analyzed today. So if you want them, go ahead and rewind this video and go back.
Revenge of the Nerds, Paul edition.
Revenge of the Nerds. Oh my gosh. Yeah, Paul, that is you.
That's
chess
funny.
champion. I would say, Paul, one thing that came across, and we're not going to go too much longer, folks. One thing that came across is someone said that Michael Burry's top position is in Lumen Technology. Have you heard of Lumen?
I think we did Lumen ones, didn't we?
Well, it sounds familiar, and boy, is it down, Paul. This is an incredible company. I mean, CenturyLink, basically. CenturyLink, Lumen Technologies. The ticker symbol is LUMN. LUMN. It's an American telecommunications company in Louisiana. And let's see. Subsidiaries are Level 3 Communications, Quest Corporation, so on and so forth. Look at the stock price, Paul. It was way up 10 years ago, 12 years ago, way up. I mean, way up. It was upwards of 40 some odd, 45, 48, $50. It's now at 13, Paul. This is for Lumen Technologies. You want to look at this company? What do you think?
Let's do it.
Erase all that nonsense before you get cooking. What is the market cap for Lumen, baby?
Lumen looks like it's a $14 billion company. No PE because they don't make money, so negative profit margin, X and X. Another reason I want to get rid of the profit margin as a metric, because if there's no PE, it's automatically an X. But they pay a dividend of $1 billion. So let's look at the free cash flow. A high dividend yield of 7.6%.
Good Lord, 7.6.
I mean, immediately I'm like, wow, Michael Burry owns a stock. It shows how much I don't know.
Okay, how about pillar number 3, which is revenue growth over the past 5 years?
17.5 to 20.7, check mark. But if you see, there was a big jump from 17 to 18 and then a steady decline. So who knows?
Profit growth over the past 5 years?
Oy vey. 626 to a loss of 1.23. X there. Now, I will say, over the last 3 years, Seth, look at this. Other income and expenses. Negative 2.7, negative 6.5, negative 2.68. They probably had big write-offs here. Understand what those write-offs are for, guys, because that might be what Michael Burry likes about the company, that they have big write-offs, and those write-offs aren't going to affect the business, and the cash flow is good, potentially.
Owen's saying he thinks that you had options on this company. Is that correct?
I don't remember. Maybe I did.
The people are saying, yeah, he did. Okay, let's go. Pillar number 5 is shares outstanding. We want this going down. 540
million down to up to 1.08 billion. That's doubling. Do they have a stock split, and that's what I'm missing here? No. They had a big jump. It's literally doubled and doubled.
Whenever we go over a Burry stock, it's just mind-boggling what's going on. But this one is really strange, Paul.
Yeah, that's what he does. He does very thorough analysis, and he's able to go sift through the crap and go, hey, well, look what I found.
Pillar number 6 is assets over liabilities.
3.1 billion versus 6.6 billion. Ooh, that sucks.
Bad underneath?
Oh, that's bad.
Okay, all X's except revenue growth.
Okay, now cash flow, baby.
Go ahead.
Cash flow. 1.6 billion to 2.8 billion. Check mark there, with an average of 2.4.
2.4 bill.
Times 20.
Yes.
Equals $48 billion.
Oh my God. The current market cap is $14 billion.
So what's 14 divided by 2.4? 6? Not even.
2.4, yeah. It's a 5.8, Paul.
All right, guys. Here's your kicker. That's incredible. And the last year was 2.8 billion of that. 2.8 billion instead of 2.4. So guys, this is where the play is. If you think the company's sticking around, if you think those write-offs are temporary, if you think the business is going to go back to normal, revenue is down a lot, but it's only selling for 5.8 times free cash over the last 5 years.
Revenue is up, Paul. I'm sorry.
Oh, sorry. But yeah, but the revenue is declining over the last 3 years, if you remember.
Okay, keep going.
Look at the revenue in the last 3 years. Remember this. 23 down to 20. So it's, even though it's up, it's still a decline over the last 3 years.
Okay, well,
now,
you know everything.
If they sold stuff here, like they had the write-offs they had, maybe they sold divisions off for a loss. And that could be the explanation why. This is why 8 Pillars is so great. It tells you the story and tells you what questions to ask now. They had 3 major write-offs in the last 3 years. They had declining revenue in the last 3 years. That tells me, okay, maybe they sold some assets, some businesses that they had to sell for underneath where they were on the books for, and that accounts for the write-offs. And that accounts for the revenue loss as well. This could be a good deal.
Michael Burry got in at $10. People are saying that's a nice time to get in. Paul, they did have that ridiculous dividend of 7.6%, paying out $1 billion of their $2.4 in free cash. Are you worried about that huge dividend?
No, I'm not.
You're loving it.
They have 2.8 last year, 3 billion. Guys, somebody find out if they sold assets, if they sold companies off. If that was part of the issue they had.
John, the website you're looking at is our software, the everythingmoney.com software. You can get this software if you're a Patreon. Our patron members have been frothing at the mouth for the software for a long time. They finally got it this month, and they're tickled. They're tickled. I was going to use a profanity there, which I really love doing in my real life, but they're tickled to have that software, and you can too as a patron. Of course, Paul, you know, it just hit me on the way in that we're like 18,000 something subscribers away from giving away that Tesla. And what a day that's going to be. One of our patrons, if you're in the Patreon group, you're automatically entered. And if you're in there for a long time, you get more entries to win the Tesla. If you're here in America, we will get you in here. We'll go pick out the dang car ourselves, pick out the color. We'll make it a whole day. You'll be on the show. It'll be incredible. So yes, Lumen Technologies, Paul, look at that. Look at that. So you had a desired market cap of 48 bill, current market cap of 14.
Well, I had a desired based on our 20 times free cash flow.
Yeah, of course.
And it's currently selling for 5.8 times the last 5 years free cash flow. And of which, on that 5 years free cash flow, if you look, they had pretty low numbers the first 2 years. 1.6 and 772. I mean, I get this. What's 14 divided by 2.8?
5.
It's selling for 5 times last year's free cash flow. I mean, guys, this is what I say. Like, even crappy numbers at 5 times free cash flow, the story's good, and they sold off divisions or something like that, it might make sense.
That is our take on Lumen. What an interesting company, Paul. I got to tell Gio about this. My son, he loves this stuff. And speaking of kids, the Akron Children's Museum, they are on watching the show right now. All the donations today, all of you wonderful people all over the world, right, they are watching. Beth told them about our donations. It's well over $200 with the Paul Gabriel out-of-his-pocket match that is going straight to the Akron Children's Museum, which does scientific STEM, how would I call it, Paul? It's like STEM, not research. I keep saying research because I'm a chemist. But
and I'd like to thank the Akron Children's Museum for proving that private enterprise works way better than government. So I appreciate you guys starting a charity that doesn't rely on government, because you guys realize that private enterprise is way better than government. And you guys, I love you for that. I love the fact that you realize that private enterprise is way better than government.
Yeah, I would say these folks came together and said, we need something to strengthen Akron, right in the heart of downtown Akron. They started this children's museum. You want to talk about ground floor. I mean, the fundraising we've been doing, I wouldn't say we've been mildly involved. You have too, mildly involved, but the people who've really been putting the effort in over the past 3 years have made an astonishing charity downtown where I remiss to say, like, STEM activities. Thank you, Beth. Like, is it 100,000 people have visited this new place? So
is it really?
Yeah. Here come the donations for Akron Children's. We appreciate you guys. Of course, all your donations, thanks to Jerome, one of our patrons, all your donations will now be matched by Uncle Paul and his chubby wallet, and not that chub he has in his pants. So we thank you guys for watching. And yeah, Paul, what do you think? Oh, and George is saying, can we recommend for next charity? I guess we could. We're going to run it through some. We have charities.
We're gonna do Mo next. Mo will pick a charity next. I'm going to ban him if he says the Rush Limbaugh Foundation, but whatever it is, we're going to figure out whatever charity is next, and we'll go from there.
So ZXR Skills, he donated twice today, Paul. Get with us on our live stream or hit me up on Discord. We'll get you another one since we weren't able to do that banking stock that he wanted to do. We'll get you next time. I love you, and here come more donations. I love you guys. We appreciate it. Yep, Richard is donating for the cause. Incredible, guys. Paul, what do you think? No live stream on Thursday, folks. We're coming down to once. Oh my gosh! Now the donations, the wonderful donations are coming in.
Wow, that's very nice of everybody.
Yeah, it's a very near and dear to our hearts, so we appreciate that. Paul, I know your kids one day will go to the Akron Children's Museum, the spawn of your yeah. Anyway, folks, so no live stream on Thursday. We wanted to make this a little more exclusive, and you guys represented over 400 people today. We thank you so much. David, we're gonna have a tough time with the shorts check because we're David, I've been thinking for the new studio that we're gonna have a full shorts cam. I want to get a full camera.
Just in the shorts?
Just right on Paul's crotch and butt cheeks for the whole show that we'll cut to, and it'll be hilarious. So we'll go with the Paul shorts cam.
Should I do this dance?
It's a new thing. So, anyway, we'll make him
jump.
Should
we do a question and answer session now?
Well, people they want you to just jump up the air like Anchorman, like, yay.
Oh, that hurt. 40. Oh, jeez.
So we can do some question and answer. I mean, we're probably going to slow down on the stocks. Paul has been talking for about 4 hours now straight, and so
anybody want to buy my ride shares as charity?
Paul, exciting things for the channel moving forward. Your thoughts?
Okay, guys, you guys know the software. The software is already going through a redesign. We have to add the app. There's so many attributes of the software. If this is, it's the whole cliche, guys, of the big iceberg. Is that an iceberg?
It looks like a turd.
This is right now. This is what you're seeing of our software. Is right up here. This is above the water. This is all you're seeing. This is so much stuff to go. It does look like a turd. It's kind of an iceberg.
Floating in your porcelain bowl at your new mansion.
It's like that iceberg. I don't know. It's like a sperm now.
Yeah. So anyhow, Paul, we're gonna get. Oh, now Beth is hanging out. Now Beth is donating $25 to the Akron Children's Museum. Thank you so much, Beth. Did she
go with her? Did she ask her husband about that?
They want you to do more jumping. Hawkeye just gave $10 for more Paul Gabriel jumps. Can you do that jump one more time? Sort of the Wayne's World.
Should I move this?
You're so athletic, Paul.
By the way, Mo's girlfriend Nicole said that she could beat me in a race. And now she's backtracking because I don't think she realized what she was saying.
You claim to be the fastest friend we have.
Oh, 1,000%.
Yeah.
Like nobody's beating me in a race. Sorry.
Maybe you and I should just race at some point, Paul.
I would love it. Read Husband's recent. I did not read Husband's recent post. I have to go re-sign up for his newsletter on my new email versus the old email. So, anyways, the software is going great, guys. We're doing a lot of work for it. The capital commitment to it is incredible. I have 3 developers working full time on it. They're awesome. Tim does a great job of managing developers. We have a really good group here. The great news is, as we grow, as our revenue grows as a company, we're going to be able to spend more and more on the software and doing more. I'm about ready to sign up for more data. The data alone is $10,000 a month or more.
$10,000?
Yeah, a month.
I assume it's coming out of your payment.
It's coming out of my payment, not your payment, Seth. But this is why. I mean, I told Seth when we first started, I'm paying you on revenue. Why? Because I don't want to have to go to him and go, Seth, I really want to do this. I just do it. And Seth doesn't know or care. He shouldn't care. Literally $10,000 a month is by the way, that's not even all the software we're going to get. I want to add options. There's so many things I want to add. I want this to be your go-to. We want to have 50,000+ people on our software at some point here in the next 3 or 4 years. So it's going to take a lot. We have a lot of plans for the channel. More mindset. What was my 3 words?
Enough of that nonsense. Is Mo? Are they really girlfriend boyfriend now?
I don't think.
I was like 7th grade official, Paul.
I was. Paul's low to the ground. Great aerodynamics. Band.
They say you jump like a chess player, Paul.
You know what? Come out here and freaking race me, okay? Come play me in basketball, losers. I'll take you right now. Tennis.
Paul, these are our fans. They're not losers.
Then why are they talking to me? What were we saying about the?
I have no clue. Are we going to wrestle? Look, the wrestling is going to be updated this week. We're having Hesh Sagafi.
By the way, he has a wrestling mat in his office.
Oh, it's all going to happen, Paul. Trust me, I got it all planned out now. So
is Hesh going to be my coach? I need a coach.
Yes, that's
so
it.
Hesh needs to train me. And
how many training sessions would you like before you wrestle me?
5.
5.
3.
3. Okay.
1. I just need some pointers right before we go on the mat.
Okay. A lot of people are saying now they want to race you. They also want to punch you in the face. That's great. That's great. I agree. Okay. And yes, here come the dislikes.
That's
okay,
true.
All right, guys. That is our show. So Mo is going live again.
Hey, Mixon, just like the little kid in gym class, all talk. Are you out of your mind? Every single time somebody talks about how fast they are versus me, I go, let's race right now. And guess what happens? They all back the F down.
Even like track people.
Oh, yeah. I've only lost to 2 people in my life. One was named Gator. Gator beat me. And you know what he said? He was the starting something at Cleveland State Athletics. He had a 4.3 40. And you know what he said to me? After you were done, I thought you had me there. He literally said those words. Another guy named Ricky, he beat me off the dribble, just smoked me. I think he was a 4.3 40 as well. I was timed it was 10 years ago with 0 training in my entire life at 4.7 40 on laser. Suck it.
I ran a 4.8 before. Okay, here
you
we
did
go.
not. I'll call BS on that
I
one.
did, yeah, in college. Okay.
Did you? You know what it was? They probably started at the 10-yard mark and ended at the 30-yard mark.
How many patrons do we need to wrestle Kathy Wood? That's a great question.
I don't think she'd like that.
Did I miss the stock discussion? I love you guys. Paul, they want you to go. Your thoughts on taxes, Paul? I'm kidding.
Mile time doesn't do anything. It's about endurance. I don't have endurance for that stuff.
So ZR Skills gave a lot of money for donation, and then he queued up a utilities company. Paul, we can't possibly look at a Fortis, a utilities company.
Give them the money back.
We'll see.
Guys, remember, no utilities, no energy, no commodities, no banks. No utilities, no energy, no commodities, no banks.
Sorry, guys. We just specialize in certain things, and we would not like to talk about things we're not good at, which is what I'm trying to do on a daily basis. So, okay, that's it, guys. We're going to work on the singles. We're going to work on the Paul and I, you should just race at some point here, and we'll get after it. Thanks for watching. As always, Quinn, you can cue up that music. I'll try and hit it right on the beat, and then Paul will chime in with some back. Yeah, and REITs. Paul, we're going to learn more about REITs, of course, moving forward. So,
sounds good.
That's our show.
See you guys.
See you next Tuesday, patrons. We love you. We love you. And thank you for all the donations going to the Akron Children's Museum today. And check out Mo in the morning, tomorrow morning. See you guys. Love you. Thanks so much.